Hold on. Before you scroll, I need your opinion on this. This isn't just information, this is about your financial future, and I want to know where you stand on what I'm about to show you. Pushing for 50-year mortgages in the US as a solution to their housing affordability crisis. Now, here's the thing, the average home price in America is around 415,000 US dollars. Expensive, yes, but here in the GTA, we're looking at $956,800 for an average benchmark home. And despite our housing being more than double what Americans are dealing with, people are already asking me, should Canada do this too? Is this the answer for the GTA? I ran the numbers specifically for Toronto and the GTA, and what I found is going to shock you. Because here's the reality, a poll just came out that absolutely broke my heart. 75% of non homeowners in Toronto and the GTA believe they'll never own a home. 3 out of 4 people have given up. And now, with Trump pushing this 50-year solution south of the border, I need to show you exactly what you'd actually be signing up for, because the truth is way different than what you're being told. Okay. So Trump is pushing this in the US where homes average 415,000 US dollars. But let's talk about our reality, the GTA. The average benchmark home in the GTA right now, $956,800. That's not a mansion, that's your average family home. That's more than double what Americans are dealing with. Let's say you've saved up a 10% down payment, which is $95,680. That means you're financing $861,120. With a traditional 25-year mortgage at today's rates, let's use 3.79%, your monthly payment is $4,435. Now, if we had 50-year mortgages like Trump is proposing, your payment would drop to $3,186 a month. That's $1,249 back in your pocket every month, over $1,200. So the question becomes, in a market where housing is already twice as expensive as the US, where 75% of people think they'll never own, does this make sense for us? Here's where it gets absolutely terrifying. Remember, Trump is pushing this where homes cost $415,000. We're talking about a $956,800 GTA home. So let me show you what these numbers really mean at our price point. In the first year of that 50-year mortgage, 12 months of payments, you know how much principal you pay down? Less than $6,000. You're paying $38,232 annually in mortgage payments, and only $6,000 is actually going toward owning your home. The other $32,000, pure interest, straight to the bank. After 5 years, 60 months of payments, you've paid $191,160 total. Your equity, only about $32,000. That's 17 cents on every dollar actually building wealth. Now compare that to the 25-year mortgage. After 5 years, you've built nearly $90,000 in equity. That's almost 3 times more wealth. But here's what really keeps me up at night. With a 25-year mortgage, you'd have $100,000 in equity by year 11. With a 50-year mortgage, you won't hit that same milestone until year 28. That's 17 years of your life where you're further behind financially, in building generational wealth, in having options. Let me show you the total damage. Over 25 years at 3.79%, you'll pay $469,380 in total interest. Over 50 years, you'll pay $1,050,440 in interest. That's an extra $581,060 in interest alone. Over $500,000 that could have been your retirement, your kids' education, your freedom, gone. And here's the part nobody talks about. You're essentially buying the house twice. The bank gets one, you get one, but wait, it gets worse. The average first time buyer in the GTA is now 36 years old. You take a 50-year mortgage at 36, you're paying until you're 86. The average Canadian retires at 65. That means you're making mortgage payments for 21 years into retirement. When your friends are traveling, downsizing, enjoying life, you're still paying a mortgage. But here's the scenario that actually scares me the most for my clients. Let's say you buy that $956,800 home today with your 10% down. 5 years from now, the market corrects, and historically, we see corrections every 10 to 15 years. Even a modest 15% drop means your home is now worth $813,280. You still owe roughly $829,000 on your 50-year mortgage. You're $15,720 underwater. Your entire down payment, $95,680, completely wiped out, and you can't sell without bringing money to the table. You're trapped, can't move for a better job, can't upgrade for your growing family, can't escape if your financial situation changes. With the 25-year mortgage, after 5 years, you'd have enough equity to weather that storm. You'd still have options, you'd still have control. That's the difference between building wealth and building a prison. Here's where it gets absolutely terrifying. Now, some of you are thinking, okay, but isn't any ownership better than renting forever? And I get it, that's the emotional argument. But let's look at the math. Average rent for a comparable property in the GTA, about $2,800 to $3,000 a month. Your 50-year mortgage payment, $3,186 plus property taxes, roughly $400 a month, plus maintenance, 1% of home value annually, so about $800 a month. All in, you're paying $4,386 a month to own versus $3,000 to rent. That's $1,386 more per month, $16,632 per year. If you rented instead and invested that difference in a diversified portfolio, earning even 6% annually over 25 years, you'd have $911,580 in liquid investments, money you can access, money that's actually yours. Meanwhile, the 50-year mortgage owner, after 25 years, they've barely paid down half their mortgage and have maybe $300,000 in equity if the market cooperated. Now, I'm not saying don't buy, I'm saying don't buy wrong just because you feel like you have to. Now, here's something critical. Trump can push this in the US because their banking system is completely different from ours. In the US, banks bundle mortgages and sell them as securities. That's what caused the 2008 crisis. They can offload the risk. In Canada, our mortgages are backed by bank deposits, GICs, savings accounts. Banks keep the risk on their books. That's actually why we survived 2008 when the US system collapsed. This means Canadian banks have zero incentive to offer 50-year mortgages to regular home buyers, especially on homes that cost $956,800 versus America's $415,000. The risk is exponentially higher. CMHC does have 50-year programs, but they're exclusively for developers building multi-unit affordable housing. We're talking 80-unit apartment buildings, not your single-family homes. So when people ask me, should Canada follow Trump's lead? Industry experts are all saying the same thing. It's not happening here for residential buyers. And honestly, when 75% of GTA residents think they'll never own a home and our housing costs more than double what Americans pay, the last thing we need is a product that looks like a solution but is actually a trap that's even more dangerous at our price points. So, what do you do if you're part of that 75%? If you feel like homeownership is impossible? First, I need you to hear this. Hope is not lost, but false hope is dangerous. Here are strategies that actually work in the GTA market. Strategy 1: geographic arbitrage. Look 30 to 45 minutes outside the core. Hamilton, Oshawa, even Barrie. Your monthly costs drop by 30 to 40%, and you can actually build equity fast. Remote work has changed the game here, although we are now seeing people being forced back full time or partially. Strategy 2: the dual income property play: buy a home with a legal basement apartment or multi unit. Let tenants cover 40 to 60% of your mortgage. You live there, build equity, and the numbers actually work. Strategy 3: start smaller, move smarter. Forget the forever home mentality. Buy a condo under $600,000, aggressively pay it down for 7 to 10 years, build $200,000 plus in equity, then leverage that into your dream home. Slow wealth beats no wealth. Strategy 4: the variable to fix strategy. If rates are elevated, start with variable when they're dropping, then lock into fixed when rates stabilize. Timing matters, and this can save you $50,000 plus over the mortgage life. Strategy 5: consider rent to own, not traditional renting. Structured rent to own with a portion going toward your eventual down payment. It's a bridge, not a destination. The key: every single one of these builds real equity, not fake equity, not pretend ownership while the bank owns your life. Look, I'm going to be real with you. The housing market in the GTA is broken. The system is stacked against first time buyers. And now politicians are pushing solutions that sound good in a headline but destroy lives in practice. A 50-year mortgage is not home ownership. It's a 50-year rental agreement with your bank where you take all the risk and they take all the profit. When I see that stat, 75% of non homeowners have given up, I don't see failure. I see people who are being fed bad information and worse options. You deserve better. You deserve truth. You deserve a plan that actually builds wealth, not just monthly payments. And here's what I know after years in this industry: the people who win in real estate aren't the ones who jump at the first affordable option. They're the ones who understand the numbers, play the long game, and make strategic moves. That's what I help people do every single day. So here's what I need from you right now: comment, run the numbers. If you want me to break down your specific situation, I'm doing free analysis for the next 15 that comment. I'm personally reading every comment and responding because your financial future matters to me. If this opened your eyes, you absolutely need to follow me right now. I'm breaking down these complex real estate and mortgage topics every week. The truth that could literally save you hundreds of thousands of dollars. And if you know someone in the GTA who's feeling hopeless about home ownership, or someone who's about to make a huge financial decision, send them this video. The 75% have given up. Be part of the 25% who refuse to quit.